What's up, you guys? It's Matt here. So I can't tell you how many times that I have been the biggest supporter, right? And I know for this whole entire time that I've talked about Terra Luna Classic, I can tell you I was the first one on the scene that believed in this position. I was the first one that saw the opportunity of this position. And I'm the only one, well, one of the only ones, there's a lot of people out there, but one of the only ones, publicly that has a following that has supported the 1.2% burn tax this entire time, or any type of burn tax this entire time. You know that I'm a fan of deflationary positions, and I think deflationary positions are kind of the future. If you can find a way to decrease that supply within normal use cases, within normal, functionality, you can see this burn down the supply, give it a stronger price, and do something better than what LP can do by itself. However, if you do have LP involved in it as well, it strengthens the LP, because let's say you have 10% right over here in LP, which is not a crazy amount, but you end up burning off that 90% that you have here. You end up burning off, 80% of it, and now you have 10% there. Well, 50% now is in liquidity. And then you have, or with liquidity pools, and then you have 10% that's out in the open. So you're looking at a stronger LP as long as you do have that out there. And eventually, whatever you can do with it, you can do with it. But the point is that you have so much strength in LP for a normal project. So I'm a big fan of deflationary positions. I've been a massive supporter of burning. And once they came out with the 1.2% burn tax, I was like, this is it. We're going to see something big, because this is a billion-dollar project, multiple billion-dollar project that could be worth, $40 billion, and could show the price that it once showed before, as we are invested at way lower prices, lower than a penny, right? If it's showing, a percentage of a penny, 10% of a penny, 1% of a penny, and, we're looking at the potential of that price and where it can get to $120, the gap in between and where people can make money from is just ridiculous. And then as you see more transactions that are happening, more burning is happening to get us back to some of these levels. People are taking profit. Yes, it affects it in a negative way. However, burning ends up fighting that negative impact. Anyways, I've been a big fan of 1.2%, but apparently there's a new way, or Binance may end up supporting a 0.5% burn tax. Again, I just want to come out here and just say, like, I don't even know how to say it, but maybe there will be a different video where I just talk about this specifically. But I pretty much told everybody so. I understand there's people that don't want, Terra Luna Classic to burn, because it's not a project that was meant just to be deflationary. It was a project that was meant to support USTC. It's supposed to be a governance token, support USTC. Yes, it would burn, it would mint, but that's only to keep the price of USTC stable. And we understand that. But this wasn't supposed to be a long-term solution, and people are looking at this as though it was supposed to be a long-term solution. They were looking at it as if they were like, oh, well, what happens in 40 years? If we do it right, it shouldn't even take a year. It shouldn't even take 2 years if we did it right. And if it was done right, we would have burned down the supply. The burning feature would have went off. We would have been back to normal. Everybody would have been happy because they would have had their gains. And if you would have held long enough, you would see more and more burns that are going through from the people that are selling. And it's just a win-win either way. But people don't look at it that way. They look at it as if I don't believe in burns because burns are not a utility. We never said that. So I'll get off that case. Anyways, they're supposed to be, Binance may support like a 0.5% burn, or support a bigger burn than what they already support. Now, I don't know if it's going to be off chain and on chain, but we'll go into this. Let's currently look at Terra Luna Classic, because we're not going to have another update here. But it's at 0.00008888. It's down about 8.88%. That's weird. That's very, very weird that came up that way. But that's how it is. Just changed. But we're seeing it at a $522 million market cap. We look at the price movement. Everything has really been sort of flat here. We have seen some pretty decent movement in the last day or so. We saw things really push up in a shorter period of time, but then now we're seeing it kind of fall off and level out. Being down about 1%. Volume today, $43.6 million. I would like to see how much DEX volume goes into that. So we're currently looking at about 145,000 DEX volume. For all of the talks of utility being the biggest thing, we're really not seeing that at all, because how much we put into that aspect of it and how much people fighted for that, or were fighting for that. And we see $145,000 that's going through there versus the $43 million that goes through CEXs. I mean, that just tells you everything and what's most important, right? It's not about whether we have a tax or not, it's about where people buy it. But, anyways, I keep going back into that. I will have something else, and I will have another video, not today, maybe another time, that I'll have to jot things down about, the burn tax. Um, but anyways, where we stand with this, right? So Lunic news, Binance may support Terra Classic increase burn tax to 0.5%. So after denying many proposals, actually, let's just go into the actual thing here. So there's an article here. They may support the 0.5% after denying many proposals related to raising the Lunic burn and burn tax. The Terra Luna Classic community finally decide to increase the Lunic burn tax. The move came as Lunic's price fell basically below that 0.00001 level last week, reaching levels of last May, when Terra USD or UST and Luna prices collapsed drastically. Meanwhile, some Terra Classic influencers have hinted the proposal coming in June to restore the Lunic burn tax to initiate the 1.2% level. However, the community may have to convince Binance CEO CZ before making these decisions, as Binance warned to revoke its Lunic burn mechanism. Now, CZ has come out and said that he was in support of a burning or decreasing the supply. It's just that um, all of the CEXs have to do it in order for it to work. And that's what I've been trying to do, is contact the CEXs, and they have been getting back to me, but some were pushing me to partnership emails and stuff, and I never got any type of real response from a person. Some actually agreed, right? We had a couple that agreed, or a few that agreed, but majority of them didn't really have any type of response or had an automated response. But CZ has said that it will work, and he even supports burns with his own coin, talking about BNB and how they have their quarterly burns, and he wants to bring this down to $100 million coins that are there, which is phenomenal, cutting the overall supply in half, understanding that decreasing the supply strengthens the project. He understands that. It's just it has to happen through all exchanges. The only reason he's doing that there is because obviously that's BNB. So he's able to do the quarterly burn because it's their project. The parameter change proposal 11.5.15 increase the burn tax to 0.5 is up for voting. The proposal aims to inform the community to focus on reducing Lunic supply through increasing the burn tax, as they do to boost Lunic demand via staking. Until now, the proposal has received 77% of votes in favor, with 20% no and 3% no with veto. It has a few days left to pass the quorum threshold. Top validators decided to support increasing the burn tax to 0.5%, which includes TCB, Stake Bin, Jesus is Lord, Moonshot, Classy Crypto, and others. Amongst 28 validators who have voted, 17 favor of the proposal, 6 are against it, and 5 have voted abstain, which abstain, as long as it is a positive vote, just ends up going with them. So you saw where the 0.2% burn tax was, right? So the 1.2% passed, and boom, everything absolutely skyrocketed. And it's not to say that we saw a ton of volume that was going through there. People were upset with the fact that we saw less volume that was going through on chain, but we still saw, that we saw the same volume as we saw the 0.2%, right? Because if we're seeing the same volume and we still see that tax, we would rather have more be burned off than less be burned off. I really don't understand it. And the whole argument was behind, DApps not being able to profit from this, or be able to make any type of money, or even break even, because they have too many transactions that are going through. Honestly, it's not about being there forever. And we understand this. It's not about being there forever. The burn tax is not going to be there for 30 years. We're planning on this to, run its course maybe like a year or two if we see enough volume, especially in CEX volume. If we see all volume that goes through this, we will burn enough in order to get the supply down to bring the price back up, to bring the price potential back up, and then restore everything that we need to restore. That's where I stand with it, but I understand that people don't want to see burns. They're used to projects that don't do this. But I really do think deflationary positions are going to be the future, even though this one is not considered a deflationary position. It's a position we're trying to revive. And the best way to revive that is for all of us to lose something, right? If we are investing into this project and we are all losing 1.2% as we are going through normal transactions, it's a win-win for everybody. Even though it seems like we're all losing, we're winning in the end because we're able to profit so much more as long as we hold on to it for a long time. We take profit. Other people benefit from us taking profit because we end up burning off some of the coins. And now you have less supply and ability to increase the price. So I don't know. Let me know what you think about it. Are you happy about that? But let's go ahead and look into this part. Binance may support raising the Lunic burns. Some believe that the burn tax should be raised permanently to 1.2%, introduced by core developer Edward Kim. Binance will completely agree. I thought it was introduced by Vegas. Binance will completely agree with it, as a burn tax was never the reason for reducing the Lunic spot and margin trading fee contribution to 50%. But proposal 109083 to contribute funds to the community pool from the burn tax. That was the reason why they ended up changing that. Increasing the burn tax is likely to increases Binance Lunic burns and overall Lunic burn rate. Meanwhile, a new project that burned 1.5 billion Lunic tokens in 2 weeks, comparatively large to Binance, the 1.2 billion Lunic burn in a month. Sorry. So basically, Binance could support it. It's not 100% confirmed that they are going to support it, but they could support it because it wasn't about the burn tax, the reason why they ended up decreasing to 50%. The reason why they did that was because we had that time where people were like, look, let's just add to the community pool so that we can pay developers and pay all these people. And yeah, it's great to be able to have things running and functioning and everything, but the idea, or my plan from the beginning, as the person that feels like I initially started everything, I was the only person to say that this doesn't look like a falling knife, that I'm going to catch that falling knife, because while everybody else sees it as a falling knife, I see it as a spoon, or it's a butter knife and it's not going to cut you. So I catch it. And that's what I did. And I end up profiting a lot. Now, I would have bought a lot more if my bank wouldn't have told me no. And I would have bought like $500, maybe even $1,000. Who knows how much I would have bought. But the point is, I couldn't do that. And the point is that I really caught the falling knife. I caught that falling butter knife, and it turned into something so much more. That butter knife turned into, pure silver or pure gold or pure diamond, right? It's an opportunity. And I knew it was an opportunity. So we'll see how all of this plays out. And hopefully we can figure out this burn rate. And we should have probably figured this out over this last year. But, we live and we learn. As long as we're learning from the mistakes that we make and we fix those mistakes, we'll be better off for it. So, guys, hit that like button, hit that subscribe button, and I will catch you guys in the next video. See ya.